of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the major developments in the banking space. Today's cover story is about the RBI's monetary policy and how long its pause would last. In Banker's View this week, we have with us Mahesh Balasubramanian, Managing Director of Kotak Mahindra Life Insurance Company. Our Banking for You segment today would demystify green deposits. Later, we are joined by our consulting editor, Tamal Bandhopadhyay, who shares his analysis of the Supreme Court order about hearing borrowers before classifying them as fraud. At the end of the show, we will tell you the results of last week's poll and, of course, the question for this week. So, a lot's coming up. When the RBI Monetary Policy Committee decided to keep the repo rate unchanged in its last meeting, RBI Governor Shaktikanta Das said it was a pause and not a pivot. Will this pause get extended? Have interest rates peaked? Here's a report by Manojit Saha.
Earlier this month, the Monetary Policy Committee, or the MPC of the Reserve Bank of India, had its bi-monthly meeting to discuss inflation and the repo rate. This time, the MPC opted for a pause. That is, it opted not to change the repo rate at all. This pause comes after 6 consecutive rate hikes in the last 6 successive MPC meetings. Between May 2022 and Feb 2023, the RBI MPC hiked the repo rate by 250 basis points to 6.5%. 1 basis point is equal to 0.01%. In the press conference after the meeting, RBI Governor Shaktikanta Das said,
"If I have to characterize today's monetary policy in just one line, I would say as follows. It's a pause, not a pivot."
Governor Das also emphasized that the decision to pause the repo rate was for this meeting only. The decision to keep the repo rate unchanged was a unanimous MPC decision. March retail inflation figures were released last week. Data showed retail inflation had fallen to a 15-month low of 5.66%. While the RBI may be in the mood to drop the guard on inflation, is there a possibility that another rate hike could be avoided? Economists say it is possible if retail inflation follows the RBI's forecast.
The impression one gets from the position which the RBI has taken is that all policy decisions are going to be data dependent. So therefore, they have asked us to interpret the present action of no change as being one which pertains to the current environment. And going forward, they're not really ruling out even an increase in rates in case it's warranted. But for all practical purposes, given the statistical advantage which we have of a high base effect, I would tend to think that the inflation number may not be crossing 6% anytime soon. When I say anytime soon, it is in the next couple of months. And unless we have something really going wrong in case of the Kharif crop, at that particular point of time, we could be looking at the inflation number once again going towards the 6% level. So under these conditions, it does look like that when the inflation numbers, which the RBI keeps seeing, would be moving towards the 5% level, I think it does look like that there would be a prolonged pause by the RBI. Of course, they'll be very watchful until September, October, because that's the point of time when we'll get to know about what has been the progress of the monsoon, the impact on the Kharif crop, so on and so forth. So if at all there's any decision about reversal of the direction of interest rates, it could be considered not before September, October.
CPI inflation is projected at 5.2% for 2023-24. Q1 inflation is projected at 5.1%, Q2 at 5.4%, Q3 at 5.4%, and Q4 at 5.2%. The FY24 inflation forecast was lowered from 5.3, made in the February policy.
So the baseline expectation we have is that the CPI inflation average would moderate to 5.3% in FY24 from 6.7% in FY23. While this is good news, it still remains well above that 4% target. And we believe that the new modified stance, this second half of the stance is to draw attention to the 4% target, not just coming below 6%.
Nair highlights three upside risks to inflation. 1. The current heat wave and its impact on perishable food prices. 2. Impact of El Nino on monsoon, though the good news is that reservoir levels are still good compared to their historical standards. And 3. Crude oil prices.
So, inflation expected to moderate, remain elevated, and risks are to the upside. So, we certainly can't rule out further rate hikes in the event that inflation does not moderate along the trajectory that the NPC expects. At the same time, we could certainly be in for a pause as well if indeed the next couple of inflation readings are not alarming in any way. So I would say that the next decision from the MPC will be highly data dependent. And one thing which will be known by then will at least be how the monsoon onset was. So if the onset is timely and the initial progress also seems to be reasonable across the country, then that would possibly allow for another pause. And if that is the case, potentially we're in for a long pause. But we don't expect a pivot to rate cuts anytime soon. I would certainly be surprised if we have a pivot to rate cuts within this calendar year.
In response to repo rate hikes by the RBI, banks have been increasing their lending and deposit rates. Interest rates on repo rate linked loans have mirrored the increase in repo rates. Repo rates increased by 250 basis points between May 2022 and Feb 2023, while the one-year MCLR increased by 135 basis points. Medium-term deposit rates are the average card rates offered on retail deposits. These increased by 82 basis points between May 2022 and Feb 2023. Will banks increase loan or deposit rates further?
Going forward, I don't think there will again be a universal increase or decrease in rates. In fact, banks will be looking at their balance sheets. They'll see what's the growth in credit, what kind of demand is there. Because we would tend to believe that growth in overall credit will be slowing down. Maybe not very significantly. For 15%, we may go down to something like 13 to 14%. So accordingly, banks will be trying to match their deposits and will be adjusting their deposit rates accordingly. So to my mind, prima facie, it looks like that there may not be any significant increase in the deposit rates, which means that even the MCLRs may not really increase. But there's a possibility that things could move downwards, but that could not be immediately. It will be based on circumstances and upon how every individual bank looks at their assets and liabilities profiles.
Credit growth has shown some signs of moderation. It fell to 15% by the end of March from a high of 18% in October 2022. At the same time, deposit growth has lagged credit growth and recorded a growth rate of 9.6% year-on-year till the end of March.
So close eyes on inflation in the coming months, and as Manojit's report said, another rate hike could be avoided if retail inflation follows the RBI's forecast. In our next segment, Mahesh Balasubramanian, Managing Director of Kotak Mahindra Life Insurance Company, spoke with Subrata Panda about the company's performance in the last financial year and the regulatory changes in the insurance sector. Here's the chat.
The insurance sector has seen a sea of changes in the last year or so since Mr. Devashish Manda took over as the chairman of IRDI. To talk about these changes and the company's performance in general, we have with us Mr. Mahesh Balasubramanian, Managing Director of Kotak Life Insurance. Welcome to the show.
Hi, Subrat.
I'd like to start off with the question that how has the company done in FY23 in business terms?
Well, YTD February numbers are available in the public domain. I think one of the goals we had set for ourselves in the beginning of last year is to grow more than the average of the industry. I remember having a chat with you as well sometime mid-year last year, and I said that this is one of the aspirations of the company. I think by YTD February, we are well on course to grow faster than the average of the industry. March numbers are yet to come in, but I'm pretty much sure that we should definitely be on course to grow beyond the industry, because March, I'm sure, has been a big month for most players, thanks to the normal March being a seasonal high, and the 5 lakh plus segment got into action because of the tax arbitrage, right? So we'll have to wait for the March numbers, but I'm hopeful that Kotak Life would continue to be among the top growing players in the industry.
You mentioned about the high value policies. So in February and March, did we see any impact of the decision of the government? Was there a pickup in
I think
sales?
sometime in the middle of March, I think the entire industry could see the customers really, because so far before that, I think people were getting aware of it, but there is always a gap between awareness and the action, and inertia normally is a period where people go through that inertia. I think by March 15th, one could see the tailwinds coming in because of this. And I'm sure when you see the final industry numbers, that tailwind will be visible. Because this March would be bigger than any other March that the industry has seen. As I said, March is always a cyclically high month, but I think year on year for the month of March, I think the numbers will look definitely better.
So we are 15 days into this new financial year, and the decision to tax high value policies has started. So are you seeing any impact of this?
Too early, Subrat, but too early to say this. But will there be an impact? Answer is yes. There is no doubt about it. Because if the impact was not there, then March would not have been such a big month, right? So obviously, customers who wanted to avail of those tax benefits have availed. So therefore, since it was a one-time tax benefit window available to them, I think most of them who would have availed it have done it, right? So will this have an impact on the industry in terms of 5 lakh plus the same customers looking at this product category differently? Answer is yes. But as I said, too early. There is still 12 months or 11 and a half months left in the year. I'm sure all of us will bring in now where our thinking caps as an industry and see how better can we attract this segment. Because the same thing happened in the unit linked, and I don't think unit linked created such a big dent, right? But yeah, we're also cognizant that non-par is a driver for this segment, and non-par did offer guaranteed returns. So my feeling is there will be an impact. How much that impact is for all of us to sit down together as an industry and as individual players, improve our value propositions, enhance our propositions to the customer, make them look at this segment from a different perspective, more from a protection perspective, etc. And so that we are able to make sure that the same 5 lakh plus customers who today went in for a particular reason of tax would probably have other reasons to buy policies from us.
Also, is there plan to move into the hinterland now? Because perhaps it was the urban centers where we saw the high value policies being sold. So as a company, will you look to move into tier
We've
three,
already
tier
been
four?
expanding our distribution consistently. In fact, ever since for this calendar year, I'm saying Jan to December of last year, and if I take from Jan to March of this year, would be about 15 months. I think Kotak Life itself would have done close to about 55 to 58 new branches we would have launched, and many of these branches are coming in the non-top 8 cities, I would say, right? We all know the top 8 cities carry a lot of weight in the Indian market, right? So we have been launching a lot of branches in the non-top 8 segments. Not that we are ignoring top 8 also we are adding, but more proportion of branches have come from the non-top 8. So I think that, again, this year, we do have plans of launching another 40-odd branches, 45 branches to be precise is what we are planning to do this year if other things given. So that again will come through a combination of tier 2, tier 3 and tier 1, right? So I think the physical footprint expansion is happening, and many players have also added branches in the last 2-3 years. So I think, see, what's happening is the agency business is becoming more and more viable now, and agency business is a focus area for many players. Traditionally, Kotak Life has always been strong in the agency business, even though we have Kotak Mahindra name attached to ourselves. We are actually probably more diversified than more players in terms of channels. We are more balanced with almost more than 50% of our business, 48 to 50% of our business is actually coming from non-bank assurance channels, right? So we have been focused on the agency business for quite some time. And I think many of the industry players are also expanding on the agency side. Agency requires branches, but they're all planning to increase our digital business. Agency business is a lot of phygital, and for which you need branches.
We saw the new commission and expense of management guidelines come in towards the end of March. Firstly, I would like to understand what do you make of these regulations and how this will impact the sector and your company?
I think it's a landmark legislation. That's something that the industry has been speaking about it for a long period of time, because and the regulator, we thank the regulator because they're increasingly moving towards a principle-based regulation rather than rule-based. And the logic from the regulator's side also seems to be we are a mature market now. 20 years insurance companies have been around, and we are quite settled as a market. So time to move to the next level of regulatory evolution, I would say, where I think the regulator is saying, okay, now we are a slightly more mature market. There are enough players. Let's give more room for the individual companies and the boards to decide and move towards a market-led behavior rather than regulator administering the commission rates, etc. So I think it speaks of the maturity of the market we are moving towards to. Number two, I think anything which is what you call allows a free market principle to apply or a flexibility to apply has its advantages, because a one-size-fits-all approach normally comes with its own handicap of not being able to do certain things which you would do based on market, geography, segments, products, channels, etc. Right? I think that freeing up of the regulation helps companies now to apply their mind and do what is relevant for their business, both in terms of their own stage of evolution plus the dynamics of the various channels, etc.
That's all, sir. Thank you so much for your time.
Thank you, Subrat.
Mahesh Balasubramanian says there is more ease of doing business for insurance companies with greater autonomy with the boards of insurance companies on issues such as costs, commissions, etc. And now to our next segment. Will green deposits be different from standard interest-bearing offerings? How will they differ? Raghu Mohan explains in Banking for You.
The Reserve Bank of India has set the stage for green deposits. These are no different from the standard interest-bearing offerings, but their proceeds must be allocated towards green finance. Green finance means lending by regulated entities or REs to or investing in activities or projects that contribute to climate risk mitigation, climate adaptation, and other climate or environment-related objectives. These could even include biodiversity management or nature-based solutions. However, what is to be seen is the pricing on these deposits. Given that the proceeds are to be deployed for a higher cause, green finance, the interest rate offered on them will be lower than on your run-of-the-mill deposits. And with inflation at its current level, will many be willing to park funds in the lower interest-bearing green deposits? It remains to be seen. A few lenders do offer green deposits: Housing Development Finance Corporation, IndusInd Bank, Federal Bank and TBS Bank. More entities can be expected to join the green deposit bandwagon, as it's also a good way to signal their status as good corporate citizens. Beyond a point, raising such deposits is also connected to lending. The RBI has clarified that the allocation of funds raised through green deposits by REs during a financial year shall be subject to independent third-party verification or assurance. This will be an annual exercise. The third-party assessment would not absolve the RE of its responsibility regarding the end use of funds, for which the laid down procedures of internal checks and balances would have to be followed, as in the case of other loans. The RBI circular must be read along with the Securities and Exchange Board of India's guidelines on business responsibility and sustainability report, or BRSR, or the top 1,000 listed companies by market cap from FY23. The disclosures under BRSR incentivize green financing and help banks and financial institutions estimate their climate-related exposure to these listed companies. In its circular last week, the RBI spelled out its rationale to encourage REs to offer green deposits to customers, protect interest of the depositors, aid customers to achieve their sustainability agenda, address greenwashing concerns, and help augment the flow of credit to green activities or projects. Importantly, Mint Road had also defined greenwashing as the practice of marketing products or services as green when in fact they do not meet the requirements to be defined as green activities or projects.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In the last week of March, the Supreme Court held that the borrowers must be given a hearing before classifying an account as fraud. I spoke with our consulting editor, Tamal Bandhopadhyay, about what this meant for the credit landscape. Here's the chat. Hi, Kamal. Welcome to the Banking Show. We are discussing today the Supreme Court's decision last month that said that the borrowers should be given a hearing before they are classified as fraudsters. So let us start by first simplifying, and if you can explain this better to our viewers, how do you differentiate between a fraudster and a defaulter?
Well, Ruchika, let's take your example. You're not a corporate entity, you're an individual, you have taken a mortgage, a home loan, right? Everything is going fine. Your salary is coming on time and you are paying your EMI. That's fine. In the current regime, when the interest rates have gone up, your EMI is going up. Now the choice is yours. You may ask your banker, look, I'm not finding it easy to pay off higher loans. So why don't you stretch my period of paying back? So instead of 15 years, it become maybe 16 years or odd 17 years. But then there's a cycle when the interest rate will go down again, your EMI, your period will shrink. So you are a perfect borrower. There's absolutely no problem at all. Unfortunately, it's not going to happen, but Ruchika, you lose your job and you're not being able to pay back. So first EMI you don't pay. So 30 days, they call it, something like a special mention account. So special mention account 1, 2, 3, 30, 60, 90 days. Till 90 days, you are there, but on the brink, 91 days, you become a defaulter. Now, you are a defaulter. You are not being able to pay, right? Now, let's take another case. You have enough money, but you are not paying back. You have chosen to use the money for some other purpose. You're going to Maldives, holidaying, you are buying gold, you are creating a lot of other assets and all. But to hell with bank, you are not paying the bank the money. Then you are a willful defaulter. You are capable of paying the money, but you are not paying the money and you are using the money for other purpose. And then when you become a fraudster, say every fraudster is a willful defaulter, but every willful defaulter is not a fraudster. So till now I was saying you have enough money, but you are spending money for holidaying and for buying gold and other assets and all. You are a willful defaulter, but not a fraudster. But what happened is this, on the very first day when you approached a bank and you offered your property as a mortgage, that actually doesn't belong to you. You have not bought it. You just forged the paper. And basis that, banks have given you a loan. And after some time, you stop giving, paying the EMIs. So, and the banks can't do anything about it because the collateral doesn't hold. It's not your property. You have fudged the document. So you are a fraudster. Is that okay?
Yes, that's very, very nice.
Now you extend it to the corporate world, and then you understand the thing. There are some businesses which the proprietor, the promoter is not responsible, but for the external circumstances, business has gone wrong. So he's a defaulter, but not a willful defaulter. There are some entities, they're using the money, the cash flow, but for some other purposes, etc. Now he's a willful defaulter. And then the third is fraudster, which is willingly swindling the bank, extracting the money, using collateral, offering collateral which actually don't exist, so on and so forth.
So why has Supreme Court taken this decision?
Well, Reserve Bank of India has continuously been pushing the banks to identify the fraudster and do this quickly. Finance Ministry, the DFS of the Ministry of Finance also has been pushing banks. And there's it's a little bit of complicated process because in India, we believe in consortium lending. Not too many loans are there given by only one bank. So there's a lead lender. Everybody has to agree. And the moment you agree, of course, then you do the investigation. It takes longer time. First you red flag, then you get some forensic audit, so on and so forth. And the most importantly, the moment you identify somebody as an entity as a fraudster and an account as a fraud account, you have to provide for it fully. So banks have not been willing, but the Reserve Bank of India has been pushing for it, and the Finance Ministry also have been pushing for it, for the faster redressal, faster recovery, faster identification. But you said why the Supreme Court has taken the decision, because what happened is that in the entire process, technically, the fraudsters are not asked. They have not been given any show cause. They are shared with. There have been all these reports, forensic report, etc. They have been shared with. They also get a copy of that. They are involved in the process, but technically it's a violation of natural justice, because even if you are being hanged, before being hanged, you have been told, no, what's your defense? Did you commit the murder or not? So in this case, I think it's nothing but those two words, natural justice.
So what do you think will be the implications of this order, both for the creditors as well as the borrowers?
Well, as far as the creditors is concerned, I think the process will get even further delay, because right now, as I said, it's a pretty long drawn out process. Internally, you do check the audit, then the forensic audit, and the red flagging, and then all the lenders of a consortium agreeing to that, so on and so forth. And then very often the borrowers going to court. And in addition to that, you are not adding one more step to that you need to give an opportunity to the fraudster for the natural justice to be heard, show cause. So it will further delay the process, I guess. That's the case. As far as lenders are concerned, that will be the case. As far as the borrowers are concerned, I'm not very sure that it will make any material impact, because one is this: the borrowers, even though they have not been heard, but they are involved in the process, in the sense they know what's going on. They're given a copy of the forensic audit, so on and so forth. And which borrower, if I'm a fraudster, do I accept that I'm a fraudster? Overall, I think it's a technical aspect. It won't make much of a difference either for the borrowers or for the lender. It'll be business as usual for the Indian banking system.
You're saying it will be business as usual, and let's see how this whole principle of natural justice serves the creditors and the borrowers. You have said that it can lead to delays. We'll keep a watch on how this story develops. Thank you so much, Tamal, for your time joining us. See you next week.
Thank you.
That's Tamal clearly stating that while fraudsters will get the opportunity to be heard now, things are unlikely to change. Moving on to the last segment of our show, the Business Standard poll. We asked you last week, should UPI transactions be charged? 83% of our respondents said no, while 17% said yes. RBI earlier this month allowed the expansion of the scope of UPI by enabling transfer to and from pre-sanctioned credit lines at banks in addition to deposit accounts. This means you can get credit just like you do with credit cards. So you can use a pre-sanctioned credit line through UPI even if your account balance is low. And therefore, our poll question this week is, will you avail credit on UPI? Our poll is open from Thursday, which is today itself, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.